What are the tax implications of severance pay? Have you ever wondered what happens to your paycheck when you receive severance pay? It is important to understand the tax implications of this type of compensation. Severance pay is money given by an employer to an employee who is being laid off or terminated. This can come as a lump sum, continued salary for a specific time, or additional benefits like health insurance. From a tax perspective, severance pay is treated as taxable income. The Internal Revenue Service considers it supplemental income, meaning it is subject to federal income tax. Employers usually withhold a flat rate of 22% for federal income tax on these payments. However, if your severance pay pushes your total taxable income higher, you may find yourself in a higher tax bracket. This could lead to a larger tax bill when filing your annual return. In addition to federal income tax, severance pay is also subject to Social Security and Medicare taxes. Employers must withhold Social Security taxes up to the annual wage base limit. Medicare taxes apply to all severance pay, and there is an additional 0.9% for high earners. Interestingly, severance pay is generally exempt from federal unemployment tax. State and local taxes can also affect severance pay. Most states impose income taxes on severance payments, and the rates can vary widely. Some states have no income tax, while others may charge rates that exceed 13%. It is essential to consider these additional tax obligations when managing your severance package. Certain parts of your severance package may be taxed differently. For example, payment for unused vacation or sick time is taxed as regular income. However, if your severance includes continued health insurance coverage, that benefit is typically not taxable. If your severance agreement includes compensation for damages, such as emotional distress or discrimination, those amounts may have different tax implications based on specific circumstances. When it comes to bookkeeping and accounting, accurately recording severance pay is vital. Employers need to account for the liability and expense in their financial statements. This means recognizing severance pay as an expense in the period it occurs and classifying it correctly for tax purposes. It is also important for employers to ensure that all necessary taxes are withheld and reported accurately on the employee's Form W-2. This helps prevent discrepancies or penalties during tax audits. Understanding the tax implications of severance pay can help you manage your finances better during a challenging time. By knowing what to expect, you can make informed decisions about your severance package and its impact on your overall tax situation.